Welcome everyone to the new Crypto Daily Show. We are testing out this fun new show where we're going to be talking about our latest news as it is happening throughout the week. And I wanted to invite onto the show Chris Karabats, who you all know and love, otherwise known as Zaphoid from Smart Cash. Welcome to the show, Chris.
Well, thank you. It's been an adventure getting here.
It sure has. And if anyone has been watching this stream, you would have seen 5 versions of it. We have been testing out this new platform because I am testing out a new platform. It is Restream, and I've never used it before. And that probably goes to show if you've seen the 75 Facebook notifications popping up, D Live notifications, YouTube notifications. So I'm hoping that this is all working across all of my platforms. But who really knows? No one really knows. But we do have some really exciting things to talk about on the show today. The main thing that we want to talk about, we've got 2 areas. One of them is what the IMF has been saying about Bitcoin and about how disruptive it is. So that's really interesting. And then we want to talk about this thread that a person in crypto Twitter, Simon Lutz, has translated and basically summarized for all of us. And it is what the former chief economist of the Swiss National Bank has been saying about cryptocurrency, about central banks, about what we will do in the case of negative interest rates, etc. So we're going to talk about all of that on the show today in this very short episode. We just want to give you a summary and give you some resources to go up and look more into this. So let's go ahead, Chris. You want to summarize basically? Let's start with the IMF.
Sure. The managing director of the IMF, Lagarde, I don't know how to pronounce her name, I'm just going to wing it. She was recently talking about cryptocurrencies and blockchain and how it's disrupting the banking industry and their issues with that and their concerns involving regulation and whatnot. You might remember IMF as the means with which Ecuador was given $4.2 billion after giving up Julian Assange last
Can
week.
we just mention that for a second? Because I don't think we really brought this home, like how disgusting and corrupt and like in plain sight this was. So Ecuador, how many billions was it, Chris?
$4.2 billion loan was given to Ecuador.
$4.2 billion was given to Ecuador by IMF at the same time as they decided to give away Julian Assange, allow the British secret police in to drag him away and arrest him on a US extradition order. I mean, these things are very clearly related, and it's just so corrupt and in plain sight that this has happened. It was in exchange. It was, 4.3 billion or however much in exchange for Julian Assange, and it's just incredible. So, I mean, we could talk at length about how we feel about the IMF in general, but let's go on to talk a little bit about how they perceive Bitcoin.
Well, this article talks about how she sees cryptocurrencies themselves as the unregulated kind of cryptocurrencies that we know and love as dangerous and chaotic, and she basically is kind of writing them off right now. What she's seeing, though, is that a lot of the banks and even the big technology players are seeing the banking industry is ripe for disruption with this new technology that our free and open source cryptocurrencies are creating. And she's seeing the danger that could come if we are advancing faster than, of course, regulation advances, because that's what she is most worried about, is regulation and making sure the trust remains between us and the banking industry as a whole. Because we all know that money doesn't work without trust. And if we lose trust in banks, we're going to lose trust in all our money, and bad things would happen to the dollar and the euro and other centralized fiat currencies. So she is very concerned about disruptors and really anything using a distributed ledger, shaking up the system and causing new things to happen, unexpected things to happen, too much competition to happen, and thus the average individual, the person who doesn't necessarily spend all day watching crypto Twitter or crypto news, to suddenly start questioning what actually is making the bank work, where their money actually comes from, and what it actually is doing when it's sitting in a bank. So they're very worried about this new bout of innovation shaking the system so much. To quote her, "We don't want innovation that would shake the system so much that we would lose the stability that is needed."
Now,
Is that
what do they mean by that? Like, lose the stability that is needed. Are they talking about the stability that happened in 2008, where everything collapsed in this fully regulated system? I mean, it's just this misconception that government coming in and adding all these barriers and complexities and regulations is helping anything. And I think we really need to get away from that misunderstanding, because it's the default everyone goes to, and it's perpetuated by the mainstream media when they're saying, oh, well, we need regulation, we need to be, making sure there are laws curtailing people's bad behavior and all of this. And the laws clearly don't work, because the good people, they're being hurt by the laws, and the bad people aren't listening to the laws anyway. So it's just not a good situation.
Well, I think in this case, stability can be replaced by control, and then you might better understand what they're actually worried about, is they don't want to lose control over the banking and financial sectors. Now, keep in mind, the IMF doesn't have a great record for loaning to people in stable countries or who have the ability to pay back, or not loaning to dictators or whatnot. The IMF is a political machine, not an economic machine. So their loans are typically going to people who it would look good politically for them to get these loans, or look good politically for the IMF to give them. Not so much worried as these people's ability to actually pay them back, or if they're going to use them for what they say they're going to use them for, or whatever. So it's really all part of the great big show to make sure that the average person does not start looking too deeply at the man behind the curtain.
Absolutely. There's always that deterrent, and it's always convenient when these distractions happen in our lives, right? When suddenly something's going on over here, the government doesn't want you to know about, and it's like, oh, look at this thing. And it's just so, people are so easily manipulated. It's very sad to see that, whether it's bloggers or mainstream media that have clearly very much in collaboration with White House narrative, with deep state narrative, and so it's just not a good situation. But let's talk about something that may be hopeful for us. I mean, when you're talking about the IMF and them being worried about Bitcoin and crypto coming in and disrupting, they should be worried. And let's kind of go into why and talk a little bit about this article that the former chief economist of the Swiss National Bank, Kurt Schiltknecht, I think that's it, Schiltknecht, is openly criticizing current monetary policy. So do you want to kind of start us off there? And we can go through each of the tweets that summarize this step by step.
Well, thank you for trying to pronounce the name. I wasn't going to insult all my German or Swiss friends by trying to say that. But Kurt, he's as you said, the former chief economist of the Swiss National Bank, and he's been a longtime critic of the negative interest rates that the Swiss banking system has had for quite some time now. Now, the problem the Swiss banking system has had is that their currency has a tendency to get too strong, because everybody likes putting their money in Swiss banks. It's a long tradition, goes back many a year.
Well, they did until the IRS broke the Swiss banking system and said, well, you used to be a nice secure haven away from the long arm reach of America, and then they broke it, and now all of the information about these accounts are divulged. And there's really, I mean, the benefits of having one of those offshore accounts has really diminished.
It has diminished, but it still has that reputation, I would say. Yes, I mean, yes, they've lost a lot of their appeal to a certain clientele because of that, but there's still people who like that, and they do have their own currency, unlike the rest of Europe. So they had big concerns about their currency becoming too strong compared to the euro. They tried to have a peg of 1.2 Swiss francs to the euro for several years, and finally gave up on that, and now it's fluctuating between, I think, 1.0 and 1.17 or something numbers. But he's a big critic of the negative interest rates and sees cryptocurrencies or alternate currencies really coming into their own as competing currency systems that will force the central banks to actually be more responsible with money and not make holding that kind of money in their banks so unattractive. Because for those who don't know, a negative interest rate means that if you deposit your money in a bank, you're losing a little bit every year, plainly, not just from inflation, but it's actually being taken out of your account regularly. So we can go through some of these tweets. Simon Lutz actually is a Twitter on the Twittersphere. He's now HODLnuts because he's another HODLnut fan. And
I'm now Hodlnaut Brockwell, and I'm a cat. Maybe we should all be wearing cat ears or something in this. Really, it's interesting, the pushback. Maybe we'll do another episode talking specifically about the whole Hodlnaut thing. But yes, you said Simon is currently another Hodlnauter. And let's start off with this first tweet here. So number one, central banks aren't backing down from negative interest rates. Instead of correctly analysing the situation, former employees and professors are experimenting around and even thinking about going even further down the path in case of an economic downturn. So let's talk a little bit about, and I mean, maybe we keep going because he really explains this very well, but should we explain what negative interest rates are for anyone who doesn't quite understand what this very complex financial structure that's been created is?
I did just touch it a little bit, but basically, we all know that in financial crises, the central banks like to lower interest rates to encourage spending. And basically, what a negative interest rate is meant to completely disincentivize you from holding on to money and keep shoving your money out into the economy as fast as possible, because they're big believers in supply side economics, meaning the faster you spend and the more you spend, the better it is. So saving bad, spending good. So let's go on to a couple.
And when they're disincentivizing people from holding, it's funny because we've got like the hodl naught and we've got the hodl impetus in Bitcoin. It's really a very different way of looking at finances, right? One side of things says, oh, well, you're losing 2% of the value of the money in savings every single year. You should spend that as quickly as possible because it's diminishing. Oh, these bonds, are actually costing you money to hold, negative interest rates. You should liquidate that, put that into private sector, put that into equities, put that into companies, and that's obviously going to drive up the stock market. That's going to give everyone this nice feel-good feeling. They're going to think that the economy is going gangbusters and everything's going well, but really what that encourages is malinvestment in all kinds of different areas. That's what creates bubbles. That's creates this consumer culture rather than a saving culture, which is, it's not good to be spending above your means and to just be throwing money away into that. And so let's keep going in the tweets. Number two, this would effectively lead to a tax on money. Well said. In case these ideas find their way into the heads of CB executives, central bank executives, the market may have to find an alternative to the euro and CHF. This may very well be a cryptocurrency. Also an alternative to USD, to AUD, to yen, to all of these things. I mean, Japan for a long time has been dealing with negative interest rates. It's been happening in Europe a lot. This is fine if you have a monopoly on the money supply. And traditionally, I mean, we'll go through and he explains it again, but let's talk about how traditionally markets have worked across the world. You've had very hard time moving money across borders, and different stock markets, like if you're an American and you want to invest in a Chinese company, you really can't do it. You can't buy Chinese stocks. There are some mechanisms by which you might have access, like via Hong Kong, etc. But for the most part, they're locked off. The same for Chinese people who want to buy American stocks. It's just not available to them because they like to keep their financial areas secure and tight and don't like money to flow across borders. And they can enforce that if there's only one money that is being used, and they can control the flow of that money. But obviously, as he says now, an alternative may be cryptocurrency, which no one can control. So let's keep going. Chris, you want to read the next one?
Sure. However, the creation of an alternative currency isn't easy in the current political climate due to legal tender laws and regulations. I could go off for a long time on that. We talk about that every week here about how regulation stifles innovation, but I think it's good to go on to the next one. We like
Let's reiterate. Regulation stifles innovation. It's really, really bad. It creates barriers to entry. It creates compliance costs for businesses. People have thin margins in their businesses to begin with, and for them to be expending mental capital and actual capital into just figuring out regulatory frameworks that are designed basically for regulatory capture a lot of the time, with existing industries wanting to protect their stronghold in different areas. It's not good. They shouldn't be spending their resources on that instead of creating value for consumers, creating better products, putting things to market, figuring out how to how to innovate and all of those things. So that little tirade aside, continue, Chris.
Sorry, I'll avoid commenting on any of that because I could forever. The idea, tweet 4, the idea of free competition between currencies was best formulated by Friedrich von Hayek, our friend Hayek. Due to relatively decent monetary policy, this idea, however, never really got much backwind. All he's saying there, I mean, and if you haven't read any Hayek, I do strongly suggest reading some of Hayek. He's not a full-on Austrian, but he does some good stuff. And what he's saying here is that because monetary policy was mostly relatively good, at least as far as Europe and US were concerned, it was very hard for alternative currencies to take off, fight their way through the regulatory headwinds, and then compete with something that really was good enough for most people. And then tweet 5, the idea.
And when he says headwinds, he actually made a translation error there. So meaning tailwinds.
No, he said backwind. Yeah, sorry, a lot of different winds he's talking about here. But yes,
oh wait, which one are you on? The 4. Never really got much.
4. When he said backwind, never really got much tailwind. Never really got much.
Yeah, I think at the very end they said that. Yeah. Blah, blah, blah. Okay, he already edited that. Cool.
Yeah, it's good. 5. The idea that competing currencies would force CBs, meaning central banks, to adopt a monetary policy that favored the entire economy. His insinuation there is that central banks have monetary policies that don't favor the entire economy, but favor an elect few.
I love that. Let's talk a little bit about that and about the dangers of having a monopoly on anything, and what's more, a government enforced monopoly, because they're really the only monopolies that can exist as long as there are no barriers to entry, which are always constructed by governments. So the fact that they've never had competition, they've never had to think about consumers when creating their products. They've never sat and had a meeting where they're like, now, what does the average household want to see in an ideal form of money? How can we innovate to give them the best product possible? How can our policies reflect what they truly desire? I mean, that doesn't come into play. What comes into play are political whims, backdoor deals, all kinds of underground and murky actions that don't favor the people who are actually using this currency and who are forced to use this currency. So I love that he's pointing out that as soon as you have competition in that marketplace, suddenly it's exactly how it sounds. You have to compete. You have to provide a better product. Otherwise, people are going to stop using yours. And now he's saying crypto could be that alternative product. Now that we have an alternative money, and we've had many alternative monies in history. Let's not pretend that we haven't. We've had a lot of them, but they've all been shut down. They've all failed because they could be controlled if there's a central operating force. But now we have a decentralized currency that can't be shut down, and it's a force to be reckoned with. It's proven.
It's excellent. To continue on 5, now that they're doubling down on negative interest rates and continuously expanding the balance sheet, expanding the balance sheet is quantitative easing. The ECB restarted that late last year, and the Fed is considering restarting it later this year. That's what Trump said. He wanted quantitative easing, not quantitative shrinking. Continuing on, the alternative currencies have to be considered. So this is, again, a former chief economist of a central bank saying alternative, meaning private market, free market currencies have to be considered. Tweet 6. Further increasing negative interest rates would damage property rights of savers even more than they already have. Pension funds would be threatened, and the European banking system would be even more weakened. I don't think speaks for itself pretty well. 7, competition between currencies would bring CBs, central banks, to think about what their job actually is.
Because they've never done that before either.
Exactly.
What is your actual job? What is your purpose? Why are you here, central banks?
Yeah.
That's a great point. Sorry, continue on that.
Is it really in the interest of the whole Swiss economy to only care about exchange rates and keeping the ECB from going belly up? Again, this is very interesting because, again, the Swiss people, they have their own central bank and their own money separate from the rest of Europe. And by focusing on keeping their exchange rate down, nominally they're saying they want to make it so their exports are cheaper. That's why you would want a weaker currency, is so that other countries can buy your products better. But also it does help the other countries, as they're running their own currency into the ground. It helps disguise that by not making products as expensive as they otherwise would have been. Mm-hmm. So basically you have collusion between two central banks that nominally would be competing, and this central bank actually doing something that's not in the best interest of supposedly its customers or whatever you want to call it, the Swiss people, but instead working with a foreign bank to try to keep their whole system propped up and ongoing. Tweet 8. Blinded by the thought that the only way to avoid a crisis is to pump more money into the market and hold on to negative rates, CBs are not seeing the economical reality manifesting itself. So again, like we said earlier, they're just interested in making sure that you can't save, that you just spend, 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 so that the economy keeps going. When in reality, you're just spend, 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 and continue pumping up the bubble so it hurts even more when it finally pops. All right, editorial mode off. Tweet number 9. There are better tools to deal with an economic downturn. However, it will be hard to get to the current ideas out of their heads, as central bankers don't want to accept the policies are creating doubt about the sustainability of the economic growth.
Heaven forbid that we should doubt the policies that the central banks have put in motion. Goodness, like this is the best thing that could be happening, that we have this new economic tool that is making us discuss these things and getting people educated about what's going on. Because what happens when you have a system that's outside of your control? It kind of out of sight, out of mind, you can't do anything about it. People don't really discuss it. You had an anomaly when Ron Paul was running and he got people interested in saying like, end the Fed. And everyone's like, yeah, what's the Fed? And it finally got people talking about what's going on here. And now we're talking even more about it because you have all these people who are into crypto who are saying now we have an alternative. We don't need central banks. And everyone's like, central banks? What are these things? What do they do? And it gets a discussion going about why it's so damaging for the economy to have people, artificially fixing interest rates, to have them artificially propping up certain prices and halting different areas of the economy and creating malinvestment incentives, with just lots of easy credit. So I really like the way we're talking about this thing. And when in this tweet, when they're saying that, if the situation of negative interest rates starts getting normalized, are we up to that tweet yet?
That's the next one.
Sorry, that's the next one. All right, I'll read the next one. Market participants have to assume that current policies will eventually end due to their negative impact. Of course. And there's this, we've talked about this on the show before, this idea at the moment that, before we used to think of lowering interest rates as this drastic measure that we use in a crisis and it helps us out. Where, the efficacy of the policy can be discussed in a different episode, whether it actually helps us out there. Ausdens would probably argue no, because it's just, again, creating malinvestment opportunities and creating more bubbles. But now we're in this situation where we're not even thinking of this in terms of a crisis mechanism. We're talking about this as something that, we could just have easy credit all the time. And that'd be great. And people would keep putting it into the stock market and pumping that up. And it would be a signal to the population that the economy is going gangbusters. And as you mentioned, Chris, this is what Trump is saying at the moment. He no longer wants to talk about quantitative tightening. He wants to talk about quantitative easing as just this permanent policy that keeps going and keeps making his administration look like it's doing great things for the economy. So this tweet saying, if the situation starts getting normalized, however, the chances of severe market distortions increase drastically. That idea that if we keep these policies going, then it's just going to create so many negative consequences that, and people stop thinking about it as this tool that is used occasionally and start like saying, this is something that we do all the time. I mean, it's going to be an absolute disaster for the economy. It's going to be a total crisis. So this is what this person is saying in his article. And do you want to go on and read the next one, number 11?
Yeah, I mean, this really is ending very strongly. I like it. Tweet 11, the outlook makes investors take a more cautious approach. The only people who don't care about the situation are politicians, as they have more money to throw around.
What? No, politicians don't care about us. They're just caring about being reelected. Oh, that's very harsh.
Too many economists don't seem to realize that the economy doesn't operate the same way with negative rates. That's a very loose way of speaking it, as in it makes, editorial mode on. Basically, it's making the hidden tax of inflation obvious with negative rates. So now everybody knows that by trying to save their money, they're losing it. So that creates that flips a switch in people's minds where suddenly they're looking for where they can safely store their money. That makes more traditional stores of value like gold much more attractive. And that also makes new stores of value like Bitcoin or other currencies like the other cryptocurrencies much more attractive to people. I mean, they know they're going to lose money anyway. So why not try this new thing that the government can't just come in and take from you like they can with negative interest rates?
Absolutely.
It's an excellent opportunity. So
yep.
More power to them. Do more negative rates.
Anyway. Oh yeah, well that's the thing. So let's talk about this. It seems like we're at a situation now because, and we're about to go into Hayek. Brings. Oh wait, no, that already passed, right?
Yeah. Hayek already passed.
So this idea that the Hayekian vision of competing currencies is now a reality is wonderful for us, because on the one hand, as this article is saying, they're going to have to look at what's happening. They're going to have to make better policies. They're going to have to compete for people's business in using these currencies. So they're going to have to do better things. That's a win for us. So either they change their policies and they're better economic policies that don't make us lose our money with easy credit and hidden taxes and all kinds of things, or the system, they don't learn the lesson. That system kind of collapses. Everyone moves to different money. So we have an alternative now, and it really is a kind of fail-safe for us if we don't screw up the crypto world.
Exactly. And that is important, that we don't screw up the crypto world, that we end up working forward in a mindset of sound economics and sound money, and that we understand what we're actually competing against and why we need to and why we want to look good in relation to this competition. So they do look to us and they don't just see some shit show. They don't just see some insane whatever.
Don't say shit on my show, Chris. There could be people who don't like that word listening. We need to always be aware of not offending any single person ever. We're not going down that rabbit hole. All right, are we up to number 12 now?
Number 12. Yes.
All right. Instead of realizing that their policy doesn't have the desired effect, they just double down. God, so much we could say about that. So let's just pause here before we continue there. The idea that politicians see a problem in society that doesn't work, and instead of saying, oh, that didn't work, let's cut that program, every single time without fail, they say, and there could be a few anomalies in there, but really this is a consistent behavior we see, where they look at this situation, they say, it's not working, let's throw more money at it because that'll help it. And they seem to have this inability to think, well, does the policy itself actually work? So what he's saying here is, instead of realizing that their economic policy, negative interest rates, doesn't have the desired effect, if this becomes normalized in society, this is just a continual thing that happens, they will just double down. Now, an alternative approach to a near zero interest rate environment could be to pay back already paid taxes to individuals and companies and to cut down on costly regulation. We spoke a little earlier about costs of regulation, the costs of compliance, the barriers to entry, the further entrenchment of existing industry, existing companies, etc. And then he goes on to say the problem of the current market environment isn't too little central bank liquidity. It's a lack of will by politicians to address the general framework of the economy, problems in the banking system, and the debt crisis. Absolutely. People are always talking about, there's a liquidity crunch. We need easy credit. We need to get things rolling. We need people to put their money into the stock markets and bump that up, as if, looking at the stock prices going up is an indicator that, everything's incredibly healthy in this economy, which absolutely is not necessarily the case.
Well, which was really good.
Sorry, say that again.
You missed the second half of 12, which was really good. An alternative approach to nearly zero interest rate environment could be to pay back already paid taxes to individuals and companies and to cut down on costly regulation. Yeah, I mean, again, giving people back their money, forbid, God forbid that ever happens. But, taking more from them in new and innovative ways, that's how we're going to fix all this.
Oh, yeah. How do we extort more wealth and spend it on things that don't work?
Now, to put this in context, remember, this was an economist at a central bank. I mean, he's still a statist, but even he's realizing that, guys, we've gone way too far here. We've lost sight of what we're supposed to be doing here. He's realizing that the institution he worked for no longer serves the purpose that it was supposed to serve when he worked for it.
Yeah,
So,
absolutely.
so you read 13 ahead of time. So
Yep,
we
yep.
can go to
Well, let's talk a little
14.
bit about that.
Sure.
So the lack of the will of politicians to
Yeah.
address the general framework of the economy, problems in the banking system, and the debt crisis. These are things that they just want to keep kicking the can down the road
Oh,
for,
yeah.
and we just
Well,
hear that over and over. It's
we all know it's impossible right
yeah,
now. It's an impossible situation. And no politician is going to go, oh, I'm not going to get reelected so I can fix this problem. And they're all just going to go, well, I want to get reelected. I don't want to piss off my constituents. So I'm just going to keep spending and hopefully it doesn't fall down under my watch. I mean, that's why Trump wants to go back to low interest rates and quantitative easing so it doesn't fall down before his reelection. I mean, that's the entire purpose of his spiel.
yeah,
So,
that's absolutely all there is there. Let's go on. So instead of getting their hands dirty, because politicians do not like that, they're fine with central banks flooding the market with money. We've seen that with the TARP bailouts. We've seen that with continued quantitative easing. It's completely opaque how much money is actually being put into the market, where it's going. There's no audit of this done. There's no records to where you can actually see whose coffers this money goes straight into. But they continue to do it, and it continues to this day. And Trump is talking about continued quantitative easing and beefing that up again. So, together with negative interest rates, this signals an abandoning of normality. Really, I mean, that is what we're seeing right now. And a lot of people have been predicting crisis coming. A lot of people have been predicting a crash coming because we are in dire straits, dealing with all these policies that are just, as the tweet earlier said, where is it here? Too many economists don't seem to realize that the economy doesn't operate the same way with negative rates. And that's so important to remember. Everything changes. When you continue these policies, everything just goes haywire. We could see hyperinflation kick in. We could see all kinds of disastrous things. So they don't want to get their hands dirty with increasing rates. And then you see the economy contract a little in order to make up for the realign and make up for all the malinvestment. Instead, they just want to see this boom going and kick the can down the road. And so they're abandoning normality by kicking this can down and continuing these disaster mechanisms that are put in place only really during times of crisis. And then it continues and says they don't really seem to care about that. And we need to remember that when we're talking about policy in government at all. We need to think about what are their incentives for this policy. Are they doing this because it's in our best interest? Are they doing this for re-election so that they can send out the right signals to make it seem like they're doing well, etc.? It's just they don't have our best interests at heart.
yeah. And to tie this back into the first article where the IMF managing director was worried that distributed ledger technologies like cryptocurrencies and digital assets are shaking the system. It's not us that's shaking.
That was my door. That was terrifying.
It's not us.
The wind gods are showing support of our our criticism of the politicians and current financial policy. That's clearly what's happening here.
Exactly. But yeah, I mean, it's not us that's shaking the system. It's us coming in to fill a need that's being caused by these other people completely failing in their duties and completely failing to serve the people they're supposed to serve. It's them that are breaking from normalcy and showing the system for what it is. We're just coming in and trying to offer a sound alternative. So they need to stop pointing at us and blaming us, though they will try to blame us. Don't get me wrong. They will definitely blame the outsider that's coming in. But they need to look inside their own house for what's causing the disregard for normalcy and the insane. I mean, even quantitative easing. Yeah, the amount of assets that the United States Federal Reserve has on its books is unprecedented. There is no time in history when a central bank has had this much of the economy under its control. They have $5 trillion in their books. I mean, that is huge. That's ridiculous.
Yeah, and whereas I'm just pulling up the national debt clock right now. So right now it's $22 trillion. It's over $22 trillion. It's absolutely insane that there's just so much money being spent and created and borrowed. And I mean, we're spending way outside of our means, and that includes we're spending outside our means even though the Fed keeps printing all of this new money, so it's just really not good what's going on in the economy right now.
Yeah, and we're continuing to accelerate our deficit and accelerate our spending, and it's just we have to. We're trying to. We're in a hole, and the only solution is to keep digging, apparently. And this debt doesn't even really cover the the assets that we have to pay back, the unfunded liabilities for pensions and for whatnot. It's much larger than this, and it's going to come to a head sooner or later, and nobody wants to be holding the bag when it does.
Absolutely. So the idea is basically, if we're to sum it all up, economic disaster, if we continue down this road, is basically unavoidable. And they really need to change their policies, which they're not going to do because, as this article outlines, politicians are very inward-looking, self-interested people who are not necessarily looking out for the best interests of the population, despite their pleas to the contrary. And so we need to be safeguarding ourselves. We need to be looking at alternatives and what could be happening now that we have alternative currencies out there as people move over to those when they lose confidence in existing financial infrastructures. So that's kind of the crux of what they're saying here. And now we'll go back and we'll read the whole article in German.
After you.
Wettbewerb ums beste Geld. Die Notenbanken bleiben in Negativzinsregimes verhaftet. All right, the joke got old really quickly.
But if you do speak the language, highly suggest you do read the source material.
I'm sure that the source in German is even better than the Twitter summary. I know, it seems strange that a Twitter summary might not encapsulate all the nuances of a very well thought out article written by the former chief economist of the Swiss National Bank. There you go. So, I mean, if anyone has any questions, let us know. This is something that we're going to be covering in an ongoing fashion in upcoming interviews. I think this is going to become more and more important. I'm probably going to talk to other economists, have them on the show to talk about this, to talk about what role cryptocurrency is going to be having in the changing economy. And just moving back to what we started this segment talking about, with the IMF saying that the disruptors are clearly having an impact on the banking sector. And I think that that's such an important point, that if the director, Christine Lagarde, is saying this, the director of the IMF is saying this about cryptocurrency, I mean, it means that traditional finance is feeling this. They're noticing this disruption. Exactly what this article is saying is really coming true. People are looking for alternatives. They're testing out these new alternatives, and this whole system is going to get disrupted. And we need to make sure that we are safeguarding ourselves and prepared for what could be a pretty messy decade in front of us.
Absolutely. And this was a great article. I loved reading this. This made me happy, even though this isn't foreign language article, and again, made by a central banker who's a statist. But when the curtain starts being pulled down, people will see it, and people are realizing that we're just going far too insane here. And I love reading this stuff. This is great, good for a Saturday afternoon.
Absolutely. So thanks everyone for chatting with us. Let's wrap that up here. Then as I said, we're going to talk about this in future episodes as well. But if you have any questions in the meantime, feel free to send them to me on Twitter, and I will invite more economists and more experts onto the show with us so that they can field your questions as well. So just go to at Naomi Brockwell on Twitter and send those my way. Otherwise, Bitbacker is also a great way to get hold of me, and I will post that link in the chat right now for you all. Oh, and which chat? Because guys, I'm live streaming to multiple platforms for the first time using Restream. So I would love for you guys to let me know how that's going. I'm currently on D Live, which I'm going to start using frequently for all of my casts as well. And I'm also on Facebook Live, and I hate Facebook, but I thought, why not? And I'm not even sure if anyone's even watching on Facebook, so maybe I just kill my Facebook altogether. We will see. But currently testing out those three. If there were other things that I can restream to that you want to see this platform NBT on TV on, then let me know. And it's always through Bitbacker, as you all know, if you watch my show. So have a wonderful Saturday afternoon, everyone. Thank you. Oh, what, Chris?
if you come across articles you want us to comment on, send them over to Naomi or me, and we'll consider them. And if you're
Oh,
lucky, we'll even talk about them.
we'll consider them in the privacy of our homes, drinking port, and we will ruminate on them and never tell you what we're thinking.
We might laugh at you for suggesting certain articles, but send them.
Absolutely. And so I also just posted I posted a link to the Telegram group. So again, if you have articles you wanted to send us, if you have any topics you want us to cover, questions, etc., or guests that you want us to interview, then please send those over as well. But everyone, have a wonderful Saturday afternoon. It's wonderful to have you all here chatting with us. Go and enjoy the rest of your weekend. Let me see if I can figure out how to end the stream now on all the platforms. Haha. Let's see if there's latency as well. We just start like trash talking everyone and then think, oh, it's over now, Chris. God, I hate PWXX0 in the chat. They're so dumb. All right. This is the end, guys. I love you all. Have a wonderful rest of your weekend.